Meta just unleashed an absolute financial shockwave. Total revenue hit $56.3 billion for Q1 FY26, up 33% year over year. The core advertising engine alone printed a staggering $55 billion, pushing the entire family of apps to an immense $55.9 billion. Meanwhile, the payments and other segment didn't just grow, it exploded by 74% to hit $900 million. Gross profit locked in at $46.1 billion with an 82% margin, after containing $23.2 billion in operating expenses, with R&D alone devouring $17.7 billion. Operating income reached $22.9 billion at a 41% margin. A one-time $5 billion tax benefit skyrocketed net income to $26.8 billion, surging 61% to a flawless 48% net margin. The EPS? A towering $10.44, smashing Wall Street's $6.70 estimate by over 55%. Every single line beat expectations. The long-term trajectory is flawless. Revenue has expanded without a single interruption, rocketing from $27.9 billion in Q1 FY22 straight to $56.3 billion today, nearly doubling in just 4 years. Beneath that headline, the internal composition reveals the true monopoly architecture. Advertising is compounding at a relentless 19.5% annually, steady, structural, and weaponized by AI. Payments and other is surging at a massive 42.4% per year, fueled entirely by the aggressive monetization of WhatsApp. When you flip 3 billion users into a B2B revenue channel, the growth curve has absolutely no ceiling. Reality Labs remains the lone bleeder, shrinking at 12.8% annually. But the core ad engine is so unbelievably dominant that it fully funds every single futuristic bet while still printing billions in pure free cash flow. This is the master blueprint of a trillion-dollar empire. 5 distinct businesses, 5 ruthless trajectories, 1 absolute bet. The family of apps cash engine locked in $55.91 billion, surging 33%, driving a staggering $26.9 billion in operating income. The ecosystem commands 3.56 billion daily active people, up 4%. The ultimate AI paradox is real. Ad impressions violently expanded by 19%, yet the average price per ad climbed 12%. Flooding supply, ruthlessly hiking prices. Subscriptions and B2B detonated at a 74% growth clip, tearing through 885 million. WhatsApp Business AI conversations multiplied 10 times over since January 2026, while Threads aggressively unlocks its first global ad placements. Funding this dominance, Meta slammed down $19.84 billion in CapEx this quarter alone, up 47%, violently raising full-year guidance to a towering $125 to $145 billion. The historic AMD alliance for 6 gigawatts of custom GPU capacity is locked in, delivering 2-nanometer chip supremacy in the second half of 2026. Powering this machine is Muse Spark from Meta's Superintelligence Labs. It crushes benchmarks, scoring 58% on humanity's last exam and 38% on frontier science, maintaining a near 0.2% severe cyber misuse rate. Flawless frontier performance. On hardware, Reality Labs brought in $402 million in revenue, down 2%, bleeding a colossal $4.03 billion operating loss. VR hemorrhages cash, but Ray-Ban Meta AI glasses daily active users violently tripled year over year. The signal is undeniable. Scale and massive monetization compounding simultaneously. The most dangerous, lethal combination in corporate history. Daily active people skyrocketed from 2.36 billion in Q1 2020 straight to 3.56 billion today, absorbing over 1.2 billion users in just 6 years. The Threads launch alone captured 100 million users in days, executing the fastest app adoption on the planet. But the average revenue per person reveals the true cash-printing monopoly. From a mere $7.60 in early 2020, it climbed, briefly reset in 2022, and then recovered violently, peaking an explosive $16.60 in Q4 2025 before a slight seasonal shift to $15.70 in Q1 2026. More users, higher revenue per user, and AI ruthlessly extracting maximum value from every single impression. Absolutely no competitor on Earth is running a flywheel at this terrifying scale. Peel back the 61% profit headline to expose a brutal reality. That surge was heavily inflated by a one-time $5.02 billion corporate alternative minimum tax benefit. Strip it away, and core adjusted profit growth sits at 14%. A drastically different signal for the elite. The workforce is being ruthlessly rebuilt. 8,000 roles slashed, 8,000 open positions vaporized. A strict 10% reduction. Not a retreat, but a cold-blooded, AI-first capital reallocation toward elite engineering talent. The global revenue map is a slaughter. North America prints $21.27 billion with 14% pricing power. The saturated cash cow, defying privacy laws. Europe leads the planet in ad pricing with an 18% explosion, delivering $13.24 billion. Asia-Pacific drives volume, surging with 23% impression growth to lock in $15.45 billion. Rest of world stacks another $6.36 billion, with price and volume ripping into the high teens. To sustain this behemoth, Meta deploys next-gen server racks packing 72 custom AMD GPUs on TSMC's 2-nanometer process. They unleash a terrifying 1.4 exaflops per rack, with HBM4 bandwidth tearing through 19.6 terabytes per second. An impenetrable compute moat, cemented quarter by brutal quarter. But the risks are weaponized. The EU threatens catastrophic fines up to $12 billion for Digital Services Act violations. Australia pushes a 2.25% news revenue tax. In the New Mexico trial, looming in May 2028, carries a devastating $375 million penalty. An absolute legal minefield surrounds every single market. Yet, no company in human history has ever monopolized an industry's attention like this. Out of the 10 most used social platforms on Earth, Meta owns 4 of them. Facebook commands 3.07 billion monthly users. Instagram and WhatsApp lock in 3 billion each. Messenger tightly grips 942 million. And Threads has already blasted past 400 million users. 5 massive platforms. One single empire. Utterly inescapable. In the race for global advertising dollars, the gap isn't just wide. It's an absolute chasm. The global social media ad market is compounding at a 12% trajectory, scaling from $277 billion in 2026 straight toward $401 billion by 2029. Within this arena, Meta ruthlessly captures 49% of the entire market, sucking in over $134 billion. YouTube is left defending 11%, TikTok starves at 7%, LinkedIn holds 6%, and X is reduced to a mere 4%. Half of every single social media ad dollar on the planet flows directly through Meta's ecosystem. That is not just dominance. That is an ironclad, structural monopoly on human attention. Meta is executing its most ruthless architectural pivot. When open-source Llama 4 collapsed under a benchmark scandal, Meta cold-bloodedly vaporized it. In its place, Muse Spark, a fully closed proprietary supersystem from Meta Superintelligence Labs. The efficiency is mind-bending. Equivalent intelligence while consuming 10 times less compute and 90% less power. A violent generational leap. The AI money machine is printing. Ad impressions surged 19%. Pricing spiked 12%. Landing page conversions accelerated 6%. This is the explosive output of Lattice, GM, and the adaptive ranking model bypassing legacy tracking to ruthlessly optimize off-site conversions. The next interface, Ray-Ban Meta AI glasses. Daily active users violently tripled year over year, while VR Quest revenue dipped 2%. These smart glasses prove unstoppable. Armed with 12 megapixel cameras and cloud-linked processing, this ambient AI hardware will dominate the next decade. The moat is locked. A staggering $107 billion in supply chain commitments hoarding chips, energy, and data centers years in advance. But kill switch risks are live. Zuckerberg took the stand in the FTC antitrust trial on April 14, 2026. Forced divestiture of Instagram or WhatsApp remains a catastrophic threat, and the EU Digital Markets Act could mandate open access, entirely dismantling the walled garden of this trillion-dollar monopoly. Look at the sheer velocity of Meta's operating expense compound annual growth rates. This is a company that has made its choice and is absolutely not looking back. Research and development is compounding at a massive 23.1% annually, ripping through $17.7 billion in Q1 FY26 and now devouring 31% of total revenue. That is the exact sustained hyperscaler investment required to forge Muse Spark and the entire superintelligence grid. By stark contrast, sales and marketing is bleeding out at a negative 3.2% CAGR. Meta's network effects are so deeply weaponized that heavy promotion is completely obsolete. G&A is strictly contained at a mere 2.5% growth. Every single dollar ruthlessly stripped from promotion is funneled directly into R&D to construct an impenetrable economic moat. Very few empires in corporate history have executed a financial comeback this flawless. Net margins utterly collapsed to 14% back in Q4 FY22 as the massive metaverse bet hemorrhaged cash and the market brutally punished every dollar spent. But then came the recovery, relentless, vertical, and violent, surging to 24%, 34%, and hitting 43% at its peak. Even after Q3 FY25 delivered a shocking 5% print where net income crashed to $2.7 billion on heavy restructuring, the snapback was absolute. An unprecedented $26.8 billion in net income at a towering 48% margin in Q1 FY26, the single strongest quarterly margin in the history of the company, surging from 14% straight to 48% in just 3 years, all while the underlying revenue base more than doubled every single quarter. Without fail, Meta absolutely vaporizes Wall Street expectations. Q1 FY26 revenue of $56.3 billion effortlessly crushed the $55.6 billion consensus, cementing a streak of pure outperformance that stretches all the way back to Q1 FY23 with zero exceptions. Looking straight ahead, analysts are desperately projecting $60.1 billion in Q2, $63.1 billion in Q3, and a monumental $73.3 billion for the Q4 FY26 holiday supercycle. This is a management team that flawlessly executes on its core engine, even while sending shockwaves through the market with a terrifying $145 billion CapEx program. The earnings per share absolutely do not lie, and Meta's non-GAAP EPS trajectory is a violent, vertical ascent, exploding from a mere $2.20 in Q1 FY23 straight to a towering $10.44 today, tearing through $4.71. Then $8.02, and now shattering the $10 ceiling to completely crush the street's $8.21 estimate by an astonishing 27%. Meta doesn't just beat expectations, it violently resets the entire paradigm. Forward models suggest a brief seasonal dip to $6.70 in Q2, before aggressively accelerating through $7.19 in Q3 and straight to $8.48 by Q4. Institutional conviction is absolute. Out of 74 ratings, there is not a single sell or strong sell. This is the most violently unified bullish reading on the market, and the price targets back up every ounce of that conviction. Wall Street's 12-month consensus is pinned at $820, projecting a massive 33% upside. Among 61 analysts, the Ultra Bulls target a maximum $1,015, an explosive 64% gain. Even the absolute floor is heavily defended at $614. The fundamentals are flawless. Meta is building AI infrastructure at a scale no competitor can touch. The question isn't if Meta wins, it's how fast the market prices it in. Quick reminder, these views reflect opinions at publication. This is for informational purposes only, not investment advice. Do your own research. If this breakdown gave you the edge, hit like and subscribe. See you on the next one.